Hello, welcome. This is John Person with PersonsPlanet.com and a special video market update and important announcements. If you take a moment to read this confidentiality notice, that'd be great. Also remember that trading involves risk of loss. Stops do not necessarily limit your losses in stocks due to gap risk. All right, so the last video I did, I mentioned a lot of stocks that we're starting to see both volume and histogram indicator bearish divergence. I'd have to say between United Healthcare, Google, Comcast, one of the biggest decliners, and even Home Depot, which had earnings, which failed to really do a whole lot. The one that really stood out was Lockheed Martin, LMT, which is down about 5% today. We have Cisco coming out with earnings. Caterpillar's already reported. Electronic Arts, Best Buy, NASDAQ, NDAQ, CBOE, JCI, Dollar General, and then there's Dollar Tree, DLTR, another one that popped up just recently. The names that I'm rattling off, these symbols, Triple L, 3L, L3 Communications, Cisco, the food purveyor, SYY, Sherwin-Williams, SHW, TJ Maxx, TJX, which already had earnings and failed miserably. These are some of the names that we did in the last video the other day that you may have taken the time to look at. Tyson Chicken. Now, TSN, what's really interesting about this is I actually tweeted a buy back in June on Tyson, and I think now the bulls, as I've tweeted out, are probably left the coop, so to speak. Get it? Chicken, Tyson, left the coop. All right, moving forward. United Technologies and then Tyco Systems. So let's get into looking at a couple of these areas and stocks and see where we're going, and is the market really pressing to new highs and on strong breadth? Well, I don't think so, and there's a few sectors that are leaning towards the market to correct a little bit within itself. And I don't know, we need to monitor this over the next couple days and the next week, to be truthful, to see if it's just a small pullback or if there's a more meaningful undercurrent in the market pulling some equities down, specifically utilities, healthcare, transportation stocks. These are the areas that I kind of have a little bit of concern with. And what was once really strong is also kind of unraveling a bit. So I'm not sure if this is just, unwinding ahead of the Beige Book or the FOMC meeting. That's, the Jackson Hole, Wyoming meeting, that's coming out in just 2 weeks. But let's face it, changes in the season are upon us. Summer's officially over, but not until September 22nd. So considering this is, it is Tuesday, turnaround Tuesday, August 16th. So with that said, we've got about more than a month before summer's actually over. But the season changes when the Olympics are over, which is this week. We start to see preseason football begin, and that was this week, right? Summer vacations are over and winding down. Most people are just about in their last hurrah week for vacations. Children return back to school. In some areas, children returned back to school yesterday, and a lot of parents are saying yes. Apart from that, Congress will return to Capitol Hill. Now, notice I didn't say they're going to return back to work. I just said they return back to Capitol Hill. So we'll see what happens there. All right. So one thing I wanted to point out, this is the percent change. This is the utilities, this orange line. All year, you can see the trend of utilities. We kind of had a double top, and then now we've broken down considerably, right? What has taken its place is the XOP, oil and gas exploration sector. That, to me, has been a pretty strong sector. We've had positions in Valero, Marathon Petroleum, which is the stock symbol MPC, and I still think that we have a shot to see a continuation, a mild continuation to the upside as we try to tackle, and just kind of bear with me, but this is in terms of percent changes, as we try to tackle these highs, right? So I'm thinking we're going to try to take out 1, 2, 3, 4, maybe it's 5 times the charm. I mean, if we can't crack the upside this time after 5 attempts, there's a problem. But we definitely, at least from a technical analysis, see that oil can still, or at least the oil service sector, as well as the oil and integrateds, can move up in the next couple weeks. Why? Well, I said vacations winding down, kids going back to school. That includes colleges and travel season. And we have that one magnificent 3-day holiday weekend coming up called Labor Day, and that will be the, grand finale of vacations of all vacations, and even for us traders, right? So with that said, you can count on the fact that gasoline prices will more than likely be higher because they typically are on those 3-day holiday vacations. So we'll probably see a boost in the refiners. And ahead of that, because the markets are forward leading, so the markets are getting a kind of an edge right now by bidding up that sector. So let's take a look at it real quick. All right, today's action, the market's down. I mean, S&Ps are down 7.25. The Russell's down just a bit. In fact, let me get up to that page for you real quick. You can kind of see where we're at for the day. This is right before the close, about 15 minutes into the close of the market, and I just wanted to give you an indication. We've got the best performing sector here right now is, in fact, crude oil. Gold's up a bit because the dollar's down. Energy, XLE's up. XOP. These are your top dogs for the day. And, of course, the worst performing sectors as we go down the list, you can see on down the line, we're starting to see most sectors negative on the day, but not by a huge amount. So let me just go over here and go down. We have real estate investment trusts, the IYR, the worst. Telecoms, second to the worst right there, the IYZ. Remember what I just said? The best is now turned into be the worst. So we definitely are seeing a little bit of rotational grind out of the market. And this is like I say, the telecom sector, which really got an incredible, again, I want you to realize this is a weekly chart. All right, so we have a weekly chart. Pretty big move for that type of sector. And in 3 weeks, we've just really given back almost everything that the market took to the upside. So we are starting to see several sectors start to erode, and that is a concern. Let's take a look, like I said, the utilities. The utility sector, that's getting kind of ugly. It doesn't represent a market that has full breadth and a lot of its strong sectors staying at their highs, right? Let's take a look at XLV. XLV is just starting to, and you may notice we have a little bit of a pressure building. This is, again, a weekly chart. This is the XLV, the healthcare ETF. And today we had comments and announcements. Aetna is removing themselves from Obamacare. And you know what? This, more and more talk, it's less profitable for them. And perhaps this could translate to less subsidies, and of course maybe this could be something that's going to affect the drug stocks. But either way, XLV is one that we thought would start to roll over. We did see a little bit of, as you can see in these indicators, looking at divergences as the markets rallied up. These indicators are showing signs of tiredness, weakness in the market. All right, so granted, this is not a huge pullback, but this is the real estate investment trust. Big move this year, great move to the upside. Yes, over the last 3 weeks, we've ratcheted a little bit back off the highs. So while it's not extreme, we also note that you had a little bit of bearish divergence, and the momentum as well as the volume is starting to show signs of tiredness there, and it's pulling out. So we have several sectors on a week-to-week basis that, while the S&P 500, the NASDAQ, and all the indexes have gone up, ironically, we've just shared with you 3 sectors, utilities. I'm going to get into 4 right now. Consumer staples. So telecoms, utilities, REITs, and staples, all pulling back off this high. While we still have and past tense, a strong move in the technology and the biotech sector, pharma. Let's take a look at BIIB, Biogen, right, as an individual stock. It really did have a nice little launch, but I'd have to say, is it going to be able to maintain that structural move without some kind of commitment from volume coming in? I mean, it hit person's pivot resistance, which is that red line at 324. Maybe we could jock around a little bit, consolidate. But the one behemoth of the whole group, and now let's take a look at the ETF IBB. You can see where it is, at that pivot resistance at 300 mark there, and it's backed off in a consolidation phase. So it's not really participating over, and this is again a weekly chart. So in the last 2 weeks or so, we've not seen follow through in these sectors, and it will eventually, one of two things are going to have to happen. We're going to see further erosion in more and more sectors, and that will cause that rotational grind lower, and that will weigh in on the sector ETFs and as well as the indexes themselves. And that's my guess. It's what's going to happen as we move forward into the end of August. But it doesn't mean that all sectors are going to go down. I still think there's a shot that we have strength coming in the energy sector, the XOP. You need to watch that. Now, let's take a look at some of those old stocks that I was just presenting with you. Big concern was with Home Depot. My momentum indicator had absolutely been showing that little divergence. Markets made a new high. Even the volume, remember I was sharing with you the volume studies here, and Home Depot has earnings that looks great. I mean, a little violent in the overnight action, was down then up, and then in the day session we rallied up. Man, we couldn't get through this 138, 139 handle. To me, that's a potential failure. We got to watch to see. There's some dots in the market here, and I'll tell you exactly what those are. You will see that we have these white dots. That's the last conditional change off my indicator, something I wrote about over a decade ago. The last conditional change is a kind of a support zone level. It's also noting that you can see that we're breaking on a week-to-week basis. Notice that we're not really, it's not holding. Like this one held. This level, these white 3 dots right there, the market continuously breaks. We get a close under 136.31, and I'd have to say that the direction of that volume, if it supports that move with the on-balance volume indicator, and if my own histogram indicator starts to reflect continued weakness, I'm thinking this stock's back into the 128 handle by the end of September. Now, don't get me wrong, it's not that I'm a pessimist. We've had some fantastic calls this year. Many of you probably are aware of our tweets that we've sent out. If you're not familiar, if you go to our website, which is personsplanet.com, but many of you probably already received these tweets, you'll notice that if you click on the tweet logo, a lot of times what we've put out, and that's not mine, so I don't know anything about that one, but a lot of times what we do is I put out some bona fide information rather than, where I'm having lunch type of thing. Or you'll notice there's very few political comments here. So I keep those to myself. This is a Twitter that is just to send alerts out and get you guys engaged into actionable trade ideas. Now, this is an individual who actually, this particular guy's tweet, reading my book at the beach. Now, that was very ambitious for a summer vacation, I'm here to tell you. But needless to say, the only other comment was a retweet from somebody that was commenting on Hillary Clinton's outfit at the Democratic National Convention, looking very similar to the Grateful Dead cover Go to Heaven album. But other than that, you can see a lot of stuff that we've put out, like the SPY volume 2-to-1 ratio spreads that we were looking at. And then we go on down the line. Of course, there's, the CEO, which retired from TD Ameritrade, and we all go down the line. And what I wanted to get to was a lot of the tweets that we gave as a heads up earlier this summer, back in late June, early July. If you go back here, this chart looks kind of familiar, right? We're looking for sectors to launch higher, and one of the other areas that we talked about, guys, this is kind of funny. Someone sent me a gift because I keep saying it's a broadening top, not a megaphone. But a lot of things here we talk about. We were long Under Armour, long Ralph Lauren, Marathon Oil, Palo Alto Networks. We've had some really good trades this summer to the long side, and a lot of good, outstanding analysis that gives us reasonable expectations of what to look for. My indicators on Thinkorswim, the PPS indicator with the arrow, with the ensuing volume, showing that there's a upside in move, and we kind of bring that out to you guys. All right, every once in a while, something funny, but that's my niece and having shots with my wife, and that's my granddaughter. But let's get back to what I want to talk about. All right, so the market's really closed here. Picking a top in TLT is like picking a bottom in Twitter, but because we were buying Twitter down in this time frame here in late mid-June, and so apart from that, we also, here's one, Tyson chicken screaming. It's flight to quality trade. Chickens can't fly. This was right off pivot support. Good accumulation in volume, OBV, histogram, everything going up. Had a lot going for it. Here's the position starting with building in Twitter for itself over the summer. So as you can see, we actually put out some pretty decent stuff so that you guys can get engaged. And so the other day, you'll notice on Twitter, I said I'm getting out of a third of my positions when we hit 21. And the reason that I got out of Twitter as we hit 21, so I just want to go back and say, hey, let's take a look at some of these A tweets, and B, let's take a look at some of these recent trades. All right, so what caused me to reduce my holding in long-loved Twitter? I mean, it's kind of funny. If you do get my tweets, it's a great form of communication. And any event, what I can tell you, and all I'm really going to point out to you, it was a real simple decision. The market came right up to the person's pivot resistance, which was exactly $21. I started to see the market lose a little bit of momentum here from my histogram. This is my proprietary histogram indicator. And then as I'll just bring the whole thing into focus, the volume started to kind of give me that little, I wasn't feeling the love there, so to speak. It was starting to rally, really get ahead of itself, I think. And it needs to be, it could go for a little bit of a pause. Gap up here, gap down way back there. I'd like to see if the market does pull back, and if it, if we get back into like the 19.5 and I get one of those little buy signals, then I'll be looking for some upside, especially if we get volume and histogram indicator going with it. All right, so that's number one. All right, so if you recall, the other day I gave out some stocks that I said, hey, listen, we got some bearish volume and histogram indicators, and I said for the long term, you want to kind of keep your eye on this. So we had a buy signal, believe it or not, in Tyson right here. In fact, I tweeted that out. I'll share that with you in a minute. I mean, everything was looking awesome here. This is a leading price indicator. The price was moving down, and it was showing there was some bullish convergence. This is a price-based histogram based on my indicators, the PPS indicator and the moving averages. They helped kind of filter out what the relationship is between the price and the moving averages, and that, that relationship, as we start to move from bearish to bullish, will give us some clear cut, as well as you can see, I also wanted to show you DG here. DG, let's DG, not GD. Let's go over to Dollar General because it had the same type of weekly pattern that I shared with you. Dollar General today got smacked down. DLTR, Dollar Tree, didn't, but it was DG that we gave to you guys in the last video. L3 Communications is another one, and it's starting to melt and roll down. Electronic Arts, EA, it's starting to roll over and melt down. And again, with Home Depot's earnings today, I mean, here we have a kind of a wild day, volatility. This is one that's really been perplexing, and I think it's going to end up being like perhaps a McDonald's type trade, right? And I'll show McDonald's to you real quick. This one really could. If we see a breakdown underneath this strong support level, 135, folks, I'm thinking 126 is the next stop point. So keep that in your crosshairs. So here's Mickey D's. Now we have to go back in time because it's already it started its deceleration to the downside. It's had a heck of a time staying up this summer. It's certainly, from a relative strength perspective, underperformed the overall market. So another case in point where stocks made new highs, but McDonald's didn't participate in that rally. The volume, if you take a look at these moving average lines, they're lower. If you take a look at this histogram, it's lower. Now this is a daily chart. Some of you may kind of be thinking, well, John, it kind of resembles a little bit maybe of a head and shoulders type kind of top. And if it is, remember, if we break that neckline, the measurements down to from the head to the neckline, it breaks down, and it's not going to stop at 100. It's probably coming into the base of this pricing action in here. What would that be? Somewhere around 195 to 102, somewhere in that would be the target zone. And I think it will be happening pretty quickly, so keep that in mind. Now, we're going to wrap this up, and I just wanted to make a special announcement. If you're interested in seeing a little bit more about how these tools work and kind of figure out things, we have a Florida seminar event. What I'm calling is my trilogy trading method. And you know, I don't know about you guys, but I was talking about, I don't know how much higher this market can go. At 2,200, we seem to show a lot of different sectors, not, as I've just shared with you, starting to come off their highs. And Amazon didn't follow suit with the market today. Apple certainly isn't trading at 130, etc., etc. So I am showing signs of weakness in the market apart from what we're seeing. And is this a beginning of something bigger, or is this just the much needed relief of a pullback? And it started with consumer staples and utilities, which are, fairly defensive. So is the market preparing itself for an eventual interest rate hike? And if that's the case, how would that rock the market? Banks would seem to participate. We have a couple things, as I've shared with you here, looking at energy and healthcare and utilities. I think what's important that we're going to go over at this Florida seminar is how to teach you to use sector rotational analysis so that you can kind of, for yourself, learn to identify buying and selling opportunities. There's a relative strength analysis tool, and how do you combine this with, for example, my volume indicator, and combine those to give you a better gauge of whether you should be long or short the market, and maybe you could get stay longer a little bit. This is one of a long positions that we recommended called Pioneer Natural Resources, PXD. We were a little ahead of the curve on the energy complex, but boy, beautiful breakout. We actually wrote about it in our weekly advisory service. Now, if you look back on some of my tweets and understand this, my thoughts, if interest rates can normalize, then it might make sense to rotate out of, look what I was saying here, and look when I said it, back July 14. I said it may make sense to rotate out of high-valued utilities and staples into regionals and the banking index. I said that back around the middle of July, before we started to see the market erode. And it wasn't just a small erosion. I mean, for the fact of the utility sector, I mean, that's roughly about a $3 move on a $50 instrument. So, not bad for at least identifying what the market can do. Now, here's another one. I mean, Morgan Stanley, this is really powerful because I talked about this. We were looking at the banking, and I love that double bottom, but look at my volume indicator, folks. This is what's really cool. You can kind of see the lows in here, and you can see this kind of like basing, almost kind of constructive like a W bottom. But look at that volume indicator, right? Volume was way up here, and price was pretty close to the lows. And this was indicating, and again, this is a volume indicator, not a price oscillator. This is a volume indicator, and it does help us uncover those convergences when we start to see selling pressure dry up. And with that said, you'll note that the volume indicator turned positive when we got a PPS buy signal. Now, what was really neat about this, we were talking about Morgan Stanley. I'm like going, hey guys, we got a nice buying signal, an HCD trigger here to get long. And I started looking at options. Now, I do not like to just go out and look at options, unusual volume activity, because I generally don't know until the next day unless the open interest changes. I can't make a determination. Is it a hedge? Are they spreading it off in 1 month? Are they legging into a spread? Because a lot of these funds are not stupid. They're smart people. They may get into some of a nearby month and then add to another on a far out month the next day, and you don't pick up on that, and it was actually a spread. It wasn't an initiation of a new position. So you got to do your homework a little careful. But what I saw was way out in the leaps, the January 2018, the 35 calls, 3,000 volume out of the blue popped up when I'm looking at a buy signal for my own off my own indicators. and it was under $1. They were like 80, 90 cents in that range for under $1. I tweeted this out. I said, this is a good long-term bet for under $1. A harmless little comment. And you know what? For Morgan Stanley, you think about it. They were trading at $40 a year ago, July. So a year ago, July, we were at 40. So to go out a year and a half, figuring can it just get back to 40, was kind of like not a bad bet. Well, what's funny is today, what happened is the news came out that Value Act has put a 2% stake in Morgan Stanley. Somebody knew that. And so I think if I can help teach you to learn to find great trades on your own before the news is released by using these indicators, you're going to get a lot of benefit out of this Florida seminar, more so than you've ever gotten out of any seminar before. Now, here's a high close doji buy in Tyson. It was screaming. And this is the email, or the tweet, excuse me, that, as you can see, June 27th. June 27th, I tweet this out to people. Hey, guys, here's the buy. Again, leading indicator, and Tyson chicken. This is how these indicators can help give you a leading heads up. And if you want to learn about that, we're going to have that at this seminar, specifically how to utilize these tools to uncover gems of trades in the market like this. God damn it. So once again, if you want to learn more about this seminar, which is going to be dynamic in the material that you're going to learn how to use, all you have to do is go to backtopersonsplanet.com, click on events, see seminars right here, and just go on down and sign up. It's that easy. This is going to be an incredible seminar. We're going to go through exactly the details on my proprietary indicators. We're going to share with you how to utilize this information and put trades on using thinkorswim. If you're an option trader, we're using thinkorswim for the options analytic platform for entering orders. And there it is right now, special 3-day seminar. We're going to feed you. We're going to feed you good. And this is something that I think is going to be an exciting time to mingle with other traders with like minds and attitudes such as yourself. So right there, personsplanet.com, click on, of course, events and then seminar, and that's where you can find more information about this dynamic seminar that's being held here at the beginning of autumn, fall, to get you in shape for the end of the what I think is going to be an incredible end of year trading opportunity, everybody. Thank you for watching.